So good morning, everyone, and welcome to today's session of Pre-Bill with William O'Neill India, dated January 18, 2023. I hope everyone's doing well. And before we go ahead, I would like to give a small disclaimer that any stock, any security that you might discuss in today's session should not be considered as a buy or sell recommendation, and we are just doing it for educational purpose. So, taking a much time, I'll start with Nifty 50's chart analysis. So if we talk about about the Nifty chart for the last couple of weeks, you can see that your 17,700 or your 100 DMA mark was probably the key support. And if you talk about key resistance, it's been around your 50 DMA line and somewhere around the 18,300, 18,500 mark. And but what's negative for the Indian markets is that your 21 DMA line is moving downwards, and similarly, if you track the 50 DMA line, that is also moving downwards. So the key moving average is moving like trending downwards is never a good sign. But if you talk about yesterday's market, the current market status is in rally attempt, and Nifty moved higher by around 0.8, 0.9%. And even Nifty reclaimed its your 21 DMA mark around the 18,090 levels. And similarly, if from here Nifty is able to reclaim its 50 DMA and probably stage a follow through date, that is an up move of 1.5% or higher on volumes higher than the previous day, then we can probably take the markets to a confirmed uptrend. And if a follow through day happens with the retaking of the 50 DMA and going forward, if probably your short term moving averages such as your 21 DMA, 50 DMA start to trend higher, then it would be a good sign. Then, however, on the flip side, we've seen that in the last few days, like in the couple of weeks, you've seen that we were in a downtrend. We shifted to a rally attempt, and post that, you could see the 50 DMA acted as a very strong resistance. So going forward as well, Nifty 50, your 50 DMA can act as a strong resistance for Nifty 50. But if that is taken out and it's taken out with good volumes and with that or post that you can see a follow through day happening, then that can be a good sign for the Indian markets. Talking about key news, the result season is on and many companies are reporting their results. And if you talk about your Deltacorp Q3 FY23 revenue for operations grew by around 10.6% YOY to 273.4 crores. Profit increased by 20.5% YOY to 84.8 crores. ICICI insurance companies, both your general insurance and your life insurance companies reported their results. So the Prulife net premium income was up 4.3% YOY to 9464.5 crores, and profit fell 29% YOY to 220.6 crores. General Insurance, ICICI General Insurance Q3 FY23 revenue in premium earned grew by around 14.5% YOY to 3792 crores, and profit increased by 11% YOY to 352.5 crores. Talking about another company, FMCG company, in this case ITC, much more than that, I signed a binding term sheet to acquire 100% stake in Sproutlife Foods, which is engaged in manufacture and sale of food products under the trademark Yoga Bar. The company will invest 175 crore in Sproutlife Foods for 39.4%, which is expected to be completed by February 15, 2020. So key results, the key companies that are expected to announce their results today: Rallies India, PSP Projects, Oracle Financial Services and Software, Alok Industries, Central Bank of India, CCL Products, IndusInd Bank, and Persistent System. Talking about global markets first, the US market, if you can see, the US markets was like uh, there's no clear direction across the three indices. You can see Nasdaq closing higher by 0.1%. Your S&P 500 closed lower by 0.2%, and Dow Jones was in a proper downward trajectory as it closed lower by 1.1%. Similarly, you can see similar trend in the Asian markets as well, where Shanghai is trading higher by 0.1%, Nikkei by 0.6% but your Kospi is trading lower by 0.7%. So SGX Nifty is also being very volatile. I mean, if you track for the last 1 hour or so, it's been trading very in a muted to a positive range bound movement. Your yesterday's move by yesterday's close for Nifty was around 1860. 18,060 levels, and you can see it was hovering between your 18,080 levels to 18,150 levels in a very sporadic movement. So the movement, the possible movement in Nifty, opening in Nifty can be very muted to a positive opening kind of levels. Talking about sector view, you can see that not just your main indices, your broader market indices, your mid cap and your small cap is trading below your 50 DMA at the moment. Most indices, apart from your energy and metal, energy just retook its 50 DMA yesterday, and metal is the only one which is comfortably trading above the 50 DMA. All the other indices are trading below the 50 DMA, which at the moment is not a good sign. So probably the one of the leaders that are holding at the moment is Nifty Metal. If you look at from the 200 DMA perspective, then there are certain indices that have broken down the 200 DMA as well. That is the reality. Your pharma and IT, or IT has been laggard for the last 1 year or so. And similarly, Nifty Energy is also broken down its 200 DMA mark. So key indices, if you talk about your bank is still holding its 200 DMA. It's 1.32% below the 50 DMA. Going forward, considering the weightage of Bank Nifty of around 30-35% in your Nifty 50, if banks come back into momentum and take their 50 DMA, then it would be a good sign for Nifty. If you can see for yesterday's movement as well, as your HDFC twins fired, you could see Nifty gaining by your Nifty reality gaining by 1.17%, and then even your banking sector gain comfortably. So going forward, if that happens, if your banking sector also gains, key indices such as those that have heavy weight or gain with Nifty, then it would be easier for Nifty to probably reclaim its 50 DMA going forward. So all of this can be seen when the markets come to confirmed uptrend, and can see if past leaders continue to regain their rally, or new leaders come in with the new set of rally coming in. So thank you, and that's it from my side. And stay tuned to the space of Pre-Bell with William O'Neill India at 8:45 a.m. sharp from Monday to Friday. And thank you, guys.